Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we're diving into MPLX LP's latest quarterly report. Let's see if their profits are flowing smoothly or if there's a pipeline problem lurking beneath the surface. This report shows how MPLX did in the first 3 months of 2025. We're going to break down the important numbers and see what they mean for the company and its investors. Before we get started, if you find value in understanding these tricky filings, subscribe to our channel. Also, join our Discord community using the link in the description for more in-depth discussions. This is a 10Q report, which is like a quick checkup on a company's health. It's filed every 3 months, giving us a snapshot of how they're doing financially. This report covers the period ending March 31, 2025. So we're looking at the first quarter of the year. This number, it's like an ID for the company with the Securities and Exchange Commission, the SEC. It helps keep track of all the filings. This is what MPLX sells to investors. Think of it like shares in a regular company. It basically means you own a piece of the partnership. All right, let's get to the good stuff, the financial information. That's what we're really here for. This is where we see how much money MPLX made, spent, and ultimately how profitable they were. Okay, let's quickly look at some key numbers. Service revenue is up from 658 million to 707 million. That means MPLX is making more money from their main services like transporting and storing oil and gas. Check this out, product sales jumped way up from 370 million to 513 million. That's a big increase. It tells us they're selling more of the products they handle. Interest costs are slightly down, 235 to 229 million. That's good news since lower interest costs generally translate to a healthy financial outlook. And the big one, net income, it's up from 1 billion to 1.46 billion. So MPLX is making more money than it did last year. Earnings per unit, or EPU, also went up to 1.1 sin. That means each unit representing a share of the company is getting more profitable. This statement gives you the overall financial performance, including things that don't show up on the income statement. The comprehensive income increased from 1 billion to 1.134 billion. It just shows how efficiently the business is running. Now, onto the balance sheet. This tells us what MPLX owns and owes cash is way up from 1.5 billion to 2.5 billion. It suggests that the company has the liquidity it needs. They also increased long-term debt that is due within 1 year from 1.6 billion to 2.6 billion. I'm keeping my eye on that. And their long-term debt has also gone up from 19.2 billion to 19.7 billion. MPLX is taking on more debt to fund things. I hope they're being careful about this. Here's the cash flow statement. This tracks the actual money coming in and going out. Net cash from operations decreased slightly, going from 1.291 billion to 1.246 billion. They invested less this year than last year, 996 million versus 601 million, indicating that they did not try to expand as much as last year. For financing activities, long-term debt borrowings are up. A significant change can be noticed. It was 0 last year and close to 2 billion this year. It means they're borrowing more money. The money was mostly used for unit repurchases and distributions to LP unholders, which is something to consider. This table shows the changes in what the company owns and what it owes. Looking at these numbers and comparing with the numbers we just had, generally the company seems to be expanding with more assets while also taking on more obligations. It's important to analyze how their income is looking. These sections are where MPLX talks about any new accounting rules they have to follow and how those rules might affect their numbers. It sounds boring, but it's important to make sure they're playing by the rules. MPLX is expanding by acquiring, gathering businesses. In March 2025, they bought some assets from Whiptail Midstream for 2,000 million in cash. They also did another acquisition back in 2024 to enhance their position in the Utica Basin. They spent 625 million to buy a larger ownership in existing joint ventures and gathering assets. MPLX has investments in other companies. This section tells us about those investments and how they're doing. These are companies that MPLX has a stake in but doesn't fully control. We can see their ownership percentages and how much these investments are worth. MPLX does a lot of business with its parent company, Marathon Petroleum Corporation, or MPC. This section breaks down all those deals. MPLX's senior notes, including those issued by consolidated subsidiaries, consist of various series of senior notes maturing between 2025 and 2058, with interest rates ranging from 1.750% to 5.95%. Here they break down how much money they made from different services. I think it is pretty cool that they earn revenues from multiple sources. This section is all about potential future problems. MPLX is involved in some legal battles and environmental issues that could cost them money. I see here an ongoing dispute with the Bureau of Indian Affairs about a pipeline crossing Native American land. This could lead to significant cost or changes in how they operate. MPLX divides its business into two main parts: crude oil and products logistics, and natural gas and NGL services. This section shows how each part performed. Their crude oil and products logistics segment includes the operation of refining logistics, fuels distribution, and inland marine businesses, terminals, rail facilities, and storage caverns. While the natural gas and NGL services gathers, processes, and transports natural gas and transports, fractionates, stores, and markets NGLs. The company makes slightly more money in the crude oil and products logistics segment, 1.097 billion, than in natural gas and NGL services, EDF services, EUV billion. The risk factor section talks about all the things that could go wrong for MPLX. It's pretty standard for such reports. There aren't any additional legal proceedings from last year, so it's good that it's one less thing to worry about. These are just the documents that are attached to the report, like legal agreements and certifications, usually not that interesting. Now that we've passed through the filling, let's put everything together. From the data we've just looked at, MPLX is in a good position with all the numbers pointing upwards. Their strong relationship with Marathon Petroleum is both a strength and weakness, providing stable revenue but makes MPLX rely almost entirely on them, or they seem to be expanding into new areas both organically and through acquisitions. This could drive further growth, but it also adds risk. What might be concerning is the increase in debt and the decrease in cash flow from operations. All in all, MPLX has a diversified portfolio of energy assets. Their focus on growing cash flow and returning capital to investors is very attractive. What do you think? Did you find anything else interesting in this report? Let me know in the comments below. Make sure to hit that like button and subscribe to see more corporate breakdowns. And don't forget to check out our Discord community through the link in the description. Thanks for tuning in. See you in the next one.